India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Wednesday morning, and it's still all about President Trump and what he's doing and what he's going to do. Markets yesterday had a very, very painful session, so that's also going to be the focus, whether there is more downside or whether we should actually find some stability around where we closed. I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, hi, good morning.
Hi, morning Prashant, morning Nigel.
Morning.
I realize we are rather black, dull, grey and glum, all of us today. Thank heavens for the pink, little bit of pink that Nigel's spotting.
Well, that's right. And in fact, in the near term, I think things could be a little bit tricky. But just want to show all investors out there that in the longer term, these sort of scenarios have proved to be the best phase to get into good quality names. So hang in there. The near term's tricky, but the longer term for India should look good.
Well, absolutely. And, we'll just sort of take it step by step with what you need to know as we begin the fresh news trading session. Now, I'll get to price action in just a bit, but the news is essentially what I think will dominate more than anything else. So yesterday, same time, we were talking about how we've not heard anything with regards to tariffs on China, etc. Well, we've heard something now, and we'll play out those sound bites as well in a bit from now. So Trump has essentially said that he's weighing 10% tariffs on China over fentanyl flow in his latest comments. So this is this happened post-market hours, post-US session last night. And I think he did say, although he didn't specifically mention 1st Feb for China, but he did throw in that 1st Feb line. And of course, for Canada and Mexico as well, that deadline is the 1st of February. Now, that's one. Remember that USD, the dollar CNY, is popped up a little bit, about 0.25% or so in response to this. Now, this is over the last 3 hours or so that we've seen this. There was also one more announcement, and this happened in that press conference. Trump has announced a major infrastructure plan and investments in AI infrastructure as well. We have that big number of $500 billion worth of investments into AI infrastructure. He was standing in that room next to Sam Altman of OpenAI, Larry Ellison of Oracle, and Masa of SoftBank. And he said, well, we're going to sort of start this new venture, big investments. The intricacies, the detail, etc., we don't know. But we know, and remember, AI-sensitive stocks did pop up and close higher last night. So it's, the focus very much seems to be on building out and helping America in two areas, which is infrastructure and AI infrastructure as well. Now, I'll come to price action. U.S. equities did well. The S&P was up about 0.8%. The Nasdaq was up about 0.65%. So decent close. The 10-year yield, it was off about 6 basis points. We left up at about 4.56%. The dollar index at about 108.15. Remember, we were at 109.5 or so just about a week ago. 109.3 or so, 355. In that vicinity, we're at close to 108 rather compared to 109 now. Oil prices also about 1% lower, just under $80, $79.50 per barrel is where we finally left off at. Now, that's a global setup. Are there any big takeaways from what happened last night in the US and that we can apply here in India? Well, actually, I didn't think yesterday morning that there was anything big out of what Trump did or said after inauguration. So the market here was still in a wait-and-watch mode. But guess what? The market was not in a wait-and-watch mode, and it kind of sold off very aggressively. I don't think Trump or what he said, at least till day before yesterday, is to be blamed for the sell-off. It's got to be maybe something more or a combination of, the same kind of factors. But yesterday was painful, about 1.33% lower on the Nifty, as you can see. Where does it leave us? We broke Monday's low of 23,047. The close yesterday was 23,024. So that's the first let's see if we are able to stabilize around these levels, which is last Monday's low and where we left off yesterday. The support comes in at 22,500 below. If you continue to break, then the support comes in at about 22,500, 22,800 in that zone. If you go back, there are many highs around these levels in this 300-point band that we've seen. So that kind of becomes a support zone. Resistance, of course, every time you break lower, the previous high becomes a bit of a resistance. And yesterday's high was 23,426 on the way higher. Again, these are very, very near-term kind of levels we are looking at. On the Nifty Bank, something similar here as well. So the resistance is yesterday's high, 49,650. And downside level to watch is 47,898. That is nothing but last week's low. And below that, you look at the daily Bollinger Band, which is 47,700 for the Nifty Bank. So these are just some levels to work with. I mean, the gut feel is that we should probably stabilize a little bit. Is this related, what we saw yesterday, especially related to, I mean, for the lack of anything more imaginative, something to do with the budget? It's tough to say. I mean, is this fears once again? Every time you get close to the budget, at least for the last couple of years, you've started about fears about capital gains tax and this and that, etc. But, there's no way really to tell. So, I mean, I would kind of sort of square it off, at least what we saw yesterday, to a combination of what we've had, which is essentially, FPI selling for whatever reasons, a combination of reasons, and of course, locally, a bit of a cyclical slowdown that we are in. This morning, GIFT Nifty is indicating about a 67, 70 odd point higher start. And I hope that around these levels, which is around the Monday's low, the market starts to find its footing, even if it doesn't do anything spectacular or sharp on the upside. Surabhi.
Absolutely. And, there is some of that reaction in markets that's now playing out across China, for instance, because the tariff talk has begun. And right now it's only at 10%. But the market is taking note of that, because if you see Asia, the rest of the region is fine. Actually, the Japanese market's doing very well. There's a gain of about 1%. But look at the Hong Kong declines there, about 1.5%. If you look at the mainland Chinese market, again, it's down about 1% or so. Taiwan's actually doing very, very, very well. Whether they're seeing it as China's loss, Taiwan's gain, anyone's guess. But the fact is that these tariff announcements, as they come through, it has started showing up in stock prices. Just to add to this whole news around Stargate, which is what that entity is being called, this big AI entity that Donald Trump is putting together. This obviously is a partnership between OpenAI, SoftBank and Oracle. And the initial announcement is $500 billion over a course of 4 years. First, they put in $100 billion, and then they scale it up to $500 billion. What did Mr. Trump say as that announcement was being made? I just want to put that quote up as well. It's the same sentiment, right? He says that what we want to do is we want to keep it in this country. This is with respect to, of course, AI. And he did make a reference to China, saying China is a major competitor. So, these things are being watched very, very carefully by the market as well. And what he eventually does on China is the bigger question. And we'll only get the answers maybe the next couple of weeks. Anyway, to talk about our performance here, the fact is that India was singled out as a rank underperformer yesterday. This decline that we saw yesterday, it wasn't a global decline. Global markets were actually quite happy with the whole inauguration out of the way. But we were just falling under our own weight. On the FPI selling now, by the way, I mean, despite that fall, yes, we've managed to hold on to last week's low. Whether the bulls can still protect that, that's going to be the bigger question. On the FPI selling, again, this massive number that we've got yesterday, almost 6,000 crores of selling. It's taken the overall tally of FPI selling for January to over 50,000 crores of selling. Remember, the previous peak has been around 92,000, which we saw in November, and December was slightly better. Again now, so far in this month, we are above 51,000, almost touching 52,000 crores of selling from the FPIs. Domestic institutions obviously were buyers to some extent, offsetting that pressure. Lots of results are going to be in focus, and big index companies, can any of them come and provide some silver lining or not? On lever, the poll that Mangalam did is showing a very anemic volume growth, 1 to 2%, very anemic top line growth, 2 to 3% is what we're talking about. Plus, of course, we know that there is some pressure building up on the raw material side. So lever is not supposed to light up the charts. Talk about some of the other names. Pidilite actually could be a lot better. Again, I'm looking at the poll that Mangalam's done. 8 to 9% volume growth is what we're going with on Pidilite. There are a couple of tech companies that will be reporting as well, mid-cap tech companies, Persistent and Zenzar. And I just want to add a word on HDFC Bank. Can HDFC Bank come out and do something that will spark the mood? Not sure, because we've got the quarterly update, which was again showing that this growth in deposits is happening, but the loan growth has been very weak, just 3% this quarter. So not sure if HDFC Bank can come out with a stellar move like Kotak did. But I guess, Nigel, we hold on to hope. What about you, and what are you tracking in terms of the internals, the F&O data and all of that?
Well, yesterday was a very weak trading session, right? No two ways about that. But I think the message that came out yesterday was the markets now, they're looking more at value in comparison to growth. And everything is not fair at any price. You want to buy stocks at a good price. That was the message that we got out yesterday. Well, overnight, you have the top three indicators that we have. Well, they are fairly, positive in today's trading session as well. You have the dollar index is a little bit flattish. The yields have cooled off a little bit. And Brent crude prices as well are lower. So that's no worries on that front. In addition to that, the US markets ended in the green. The question is, yesterday's fall, did it have something to do with the weekly expiry-related factor on the sensex? Or was it that now, in fact, the markets want to take another leg down? We'll know that answer either today or tomorrow because, in fact, normally an expiry-related move does see a bit of a reversal. But the crucial support levels have been broken and crucial levels have been broken. So that's what's opening up. And that's the fear with regard to the downside. So we'll have to keep an eye out on that. What did the FIs do yesterday? Well, they not only sold in the cash market, they added more shots on index futures, close to around 5 shots for every one long position. And after a while, actually, they added more shots on stock futures as well. And they unwound some long positions. And that's what put additional pressure on the markets as well. Because remember, the FIs have been net long on stock futures. But in yesterday's trading session, the total swing factor is close to around 7% on that base out there. So the long positioning on stock futures has come down by close to around 7% in trade yesterday. What about the FI net shorts? Well, they were net short around 2.9 lakh contracts. We were saying, well, that's extreme. Guess what? In the last 1 week, those short positions have gone up by close to around 20%. And now it's around 3.5 lakh contracts on the short side, similar to what we saw on the election verdict day. That's June 4th itself. One would say it's extreme, but for the time being, it doesn't appear that they want to let go of those shorts because in long positioning has come down to around 17%. In the past, we've even seen it come down to around 10%. From there, we saw a big bounce out there. But for the time being, that's how they're positioned. The PCR, that as well is moving to the lower end of the band. Remember, it went to around 1.1, 1.2 a few sessions ago. That's come down to around 0.77 because we're seeing aggressive call writing and some unwinding of puts as well. That's the reason why the PCR has come down. Normally, if you have the FIs net short, you have the PCR at the lower end of the band, that calls for a bit of a short covering bounce, so to call it. But as of now, the crucial levels have got broken. And the structure seems to be more on the downside than on the upside, which is causing the bulls to worry a little bit. The crucial levels come up for you in the screen. The 22,800 level on the Nifty, that's very, very important. 22,800 to 23,000. You don't want that level to break out. Otherwise, in fact, we could see a breakdown to any levels, from 22,200, 22,300, and then, in fact, maybe the lows that we saw last year. And you'll want the Nifty to go ahead and build on to that 50-60 point positive start that we're seeing. The first level of resistance is 23,200. So a bit tricky in the near term, but for longer term investors, a lot of stocks have come to those levels that you want to get in.
Well,
okay.
Absolutely. And interesting numbers, interesting data. Nimesh also yesterday, and we'll sort of have that link back up. Talking about just simple, Nifty 50 and Nifty Next 50, looking at 5-year average valuations and where stocks are now after the 25 to 30% falls. And, that was, again, sort of something we'll readdress this morning. But